Broadcom announced their full year 2023 earnings on December 7th. They beat estimates, and like most in the chip sector, AI is driving revenue. The company reported record revenue of $35.8 billion, up almost 8% year over year, with a record gross margin of 69%. Operating profits of $16.2 billion were up 14%, comprising 45% of net revenue, while pre-tax income just over $15 billion improved 21% year over year, and net income up 25% to $14 billion, totaling 39% of revenue. Broadcom has a market capitalization just past $400 billion. A look at the last 5 years' financials shows the impressive growth that the company has delivered. Revenue has had compound annual growth of 9.7%, gross profit 14.6%, operating profit growing 36.3%, and net income came in at impressive 39.2%. The growth in the bottom line shows just how efficiently the business has been leveraging its assets. A closer look at the revenue breakdown shows that both the semiconductor solutions and infrastructure software channels continue to grow. The semiconductor business reported $28.2 billion with a 5-year compound annual growth of 9.24%. The software business produced $7.6 billion revenue, growing at 11.3% since 2019. Let's examine market ratios. Shares outstanding grew 1%, which will negatively impact the per share ratios. Earnings per share were up 24% year over year to $33. Sales per share continued to grow to $84 per share. Cash per share was up 8% to $33.20, and book value was better to $56. Broadcom's price earnings is 30x, higher than the S&P, which is 25.45. PE growth is good at 1.18. Leverage ratios were improved too. The debt ratio came in at 0.52. The debt-to-equity ratio at 1.57, with long-term debt being lower by $1.5 billion and equity increasing by $1.2 billion. Interest coverage is better to 10, improving with better EBIT and lower interest expense. The liquidity ratios are solid. The current ratio is 2.84, the quick ratio is 2.3, and the cash ratio is 1.92. All improved year over year, and a clear sign that Broadcom has no short-term liquidity problems. Return on assets was 19.3%, up 26%, and return on equity was a solid 59%, also better by 19%. The firm's equity multiplier is 3.04. The cash flow statement was another bright spot. Operating cash flow was up 8% to $16.7 billion. Investing cash outflows were just $689 million. Financing outflows were $15.6 billion. Fiscal year 2023 ended with net free cash flows of $14.1 billion, up 14% from fiscal 2022. Broadcom paid a dividend of $17.93 this year, yielding 1.9% and growing at 7.8%. They will be paying the next dividend of $5.25 on December 29th. The current enterprise value of Broadcom is $450 billion. This gives them a 12.7 multiple with respect to revenue and 32 times free cash flow. Market cap to income multiple is 30.5. Broadcom's guidance was that full year 2024 revenue would come in at $50 billion with the addition of VMware. EBITDA would be 60% of revenue. If we assume 39% of revenue as income, we arrive at a forward price earnings of 20.5x. The key takeaway from Broadcom's fiscal 2023 earnings was that on the pro side, the overall financials are very solid. The company has lots of cash, a good dividend yield, and the prospects for the industry growing are driven by AI. On the con side, the PE is relatively high, though forward PE might be justified. The VMware integration could be difficult. The economy and inflation could also affect Broadcom's prospects for growth in the future. We do rate Broadcom a buy, but are concerned with the share price trading at all-time highs. We have no exposure to this company. Like and subscribe.